Okay, the markets just closed. Big day, mainly for commodities. The markets were unchanged, really flat. I mean, the Russell was up over 1%, despite the banks being unchanged, even red to some degree. So that's interesting. But what's most significant is the breakout mode of commodities, really. Uranium, oil, copper, gold and silver, maybe not so much breakout mode, but definitely a strong day and maybe 1 or 2 days away from, gold taking out 2000. That's definitely possible. Now they were up despite the dollar being slightly up too. So that's interesting. And they were up decently. I mean, gold not too strong, but, notably higher. Silver was stronger. They came down a bit towards the end there with the markets, but generally the beginning, at least, the metals were inversely correlated to the markets. That's nice. I mean, markets are all-time highs, so I'm generally bearish in markets at all times. I think the economy is fundamentally weak, and it's good to have the metals going in an opposite direction because, I mean, look at this crazy rally we've had. This is totally, people think that there's a return to the norm, and I think this is when there's a total capitulation that occurs. It just takes a couple of down days. Anyway, let's take a look at every sector as I usually go through them. I'm going to try and make quicker videos now. So that was a long intro. So markets, S&P flat, right? We're just flagging towards the high. Again, I'm bearish, not technically, just fundamentally. But okay, that wasn't the worst day. The S&P closed unchanged, near high of day, but it's really an unchanged, indecisive day. Nasdaq flagging high, that's slightly bullish, I have to admit, but I mean, again, I wouldn't be buying this at all. It takes 1 or 2 days and you're below this ascending and then straight back down, and then well, yeah, that'll probably coincide with some interest rates going up or something. So the bond market, I mean, it was very quiet today, but it's pretty scary stuff. It just takes a couple of days, and either you could have interest rates squeezing higher, and then that would really justify a collapse in the markets. But for now, look, Dow Jones, look, very much unchanged, but closed a high of day, looking like it wants to just break out of this resistance. It had a late rally compared to the others, but could go a little bit higher. Next resistance here, 35,000. Let's call it 850 or whatever the high is here, maybe just below, but thereabouts. The Russell, another one with a late rally. Look at this. It's hitting the horizontal resistance here. Closed a high of day, strong day, up 1%. But otherwise, it doesn't really change much. The picture's been bullish, technically bullish for a while. And again, I wouldn't be buying this at all. But there you go. Markets remain relatively strong. Look at the financials, which really are reflected by the Russell usually. Look at this. The XLF broke out just about, or at least holding the breakout of this descending breakout. So I didn't think it would actually breach it. I thought it would fail around 35, but look, it's just popped its head above. But then again, the markets have been strong for a while, so not too surprising that it's still up here, but still relatively weak. And these are the senior banks. KBE, KRE, they had a nice rally late. You can see resistance really working here. So you're going to need the markets to go higher to go to the next level. I think next level is here 44 for the KBE, KRE. Yeah, that's lagging the KBE. This is really the smaller ones. It's got a long way to go, but look, they're fundamentally problematic, these banks. I mean, we had one, was it Pacific West, Pac West, or whatever, just getting bought out the other day. And look, interest rates going up, right? The bonds that they own just losing value. This horrible situation. Mortgage-backed securities, these guys are just, any day, it would not surprise me if another one goes, and it could be a big one soon. And that's why, and let's move on to the interest rates now, actually. Interest rates are not really coming down. Look, the 1 year is always the same thing, sideways up. So unless we close below this zone here, 5.26-ish, I don't see why this won't continue, at least the 1 year. Look, the 2 year, the 5 year, just sideways. 10 year, look at this. The 10 year is really the scary one. As soon as we close above 4.11, if we get there, I think we will. I think we just, you can see it just bam, goes above here, and the next day we're all-time highs, or, a week later or something. Let's just look at the 2 year. I skipped that one. That's also very important. That's the most important one. That's the one the Fed tends to follow. I mean, what's the Fed funds rate now? 5.25. Look at that. This thing will go and match it. I reckon we're going to break out higher. And that means basically the bond market, here we go, reflection. This is a nice ETF, the bond market. Look at this breakdown. Look at this. I haven't looked at this in a while. A close below, let's say 90, well, you could say 100, but let's be sure, 98.5. Bam, see you later. We're going all the way back down to 94 or something. Then what does it look like? It looks absolutely disgusting. So I like this. I like this breakdown in the bond market, I reckon. And you know, a lot of people have been buying bonds. A lot of people keep saying, oh, buy bonds. Treasuries are great here. Lock in the interest rate. And, you know, not yet. Not yet. That could be a bad bet. So it's probably better to hold a dollar and earn some yield on the money markets, or like interactive brokers gives you 5%. So I know inflation beats it, but it's not bad as sidelines rather than losing value in the bond market. So yeah, watch the bond market. That's pretty scary. I reckon yields will basically go higher. And then you got to ask yourself, what will that do to gold and silver? It might not be bad for gold and silver. Okay, that's yields. Let's look at the dollar. Look at this. And we'll get to commodities soon, but this was not exactly a red day. Look, we closed a high of day. I thought we would rally from here. We did. I thought we would fail around here. That's why I put it in the middle. I didn't know if it's 100.8 or a 101. That was basically the absolute low support before the flush. We got there, kind of, you know, retested it here. And so it became support actually when it reached a little higher. And now we're visiting 102 very clearly as resistance. You can see this tail here, and today we didn't close above it. Let's see, you know, it's not really bullish and not destined to go to 103, or at least this descending. That's where I think the next resistance is, until you close above this little wick here, 102 point something. Let's just say 102. It's got to close above 102. It didn't do it today. It was almost there. But let's see what happens. Let's see what I think the BOJ had a bit of an effect here, with the dollar going up against the Japanese yen today. You can see the other currencies that make up the basket of the DXY, the euro and the pound, were basically unchanged. So for me, it was the Japanese yen story. But otherwise, I think we are at resistance. So let's see. That's what's good for gold and silver. I'll get to that later. But, you know, we had a green day despite the dollar closing at high of day in the green. So imagine we roll over. That'll be, you know, gold at 2000 easily. So that's a DXY 102.8-ish, I would say, to the upside as resistance, but we are at resistance too. You can first got to close at 102. On the downside, well, let's see. I think it will be at least 1 or 2 days before we go down here. But I think prior support 108, 100.8/101, this area here would be support. But, you know, if we roll over, I think it'll be a lot of momentum on the way down and back down to here very quickly. So that's what I see for the DXY. Let's look at commodities now, starting with copper. Look at this. I was saying it's pretty strong, you know, higher lows. I'm not going to say higher highs, but, you know, look at the time period. It was taking less and less time to test this 3.95, which is resistance. And today, look at that, breached right through it, closed above 4, very nice and significant. Next, I would say 410-ish zone here, but, you know, 420 really would be the next resistance, this kind of zone. It's not going to be that accurate, but, you know, up we go. I don't know if we go up tomorrow. To be honest, we probably do, because look, up 2% despite the dollar being green. If the dollar rolls over, definitely we keep going. And they were waiting for this for a while. So copper's very nice stuff. Finally, they deserve it. So copper looks good until 420. Natural gas, this one was not as bullish as the other commodities, but then again, it doesn't care about the dollar. So it makes sense that it didn't react as crazy as the others. Sideways day, you know, I really want natural gas to curl and go up now, because it should have done this move. It always takes a long time. I mean, look what happened down here. This really got me frustrated. And then you finally think it's made it, did this fake flush, break out of this descending, and just didn't keep going. It should have kept going. And then this came down, retested. Okay. Now it's time to close above 2.75. And really, if it closes above 2.75, it really should run to 2.9. And then maybe a bit more sideways, because look, we've taken so long that now this descending comes into play. So maybe we're going to have to hover around here for a while. We take out 2.75, not an immediate squeeze past 3. But once we take out this one, actually, it probably would do something like that. You know, go here, finally go there, bit of sideways. You know what I mean? Just a bit of sideways upside. I would like that. So let's see, still bullish natural gas, definitely. Oil, this is exactly what I wanted. Exactly what I thought might happen, to be honest. Go test 80, I thought it might go a little higher. 82 to 83 is resistance. I mean, look, why do I say that? Because every time we hit 82, we basically come back down. Yes, we did go touch 83 and go a little higher, but I think it's a bit of a sell here, to be honest. I mean, this is beautiful, but it's, look at this staircase up. It's probably going to go sideways as soon as you close below this ascending, time to retrace a bit, mid 70s, and then go back up and breach higher. We'll see. It depends on, what's going on. Oil has its own supply and demand dynamics, and obviously you have the dollar come into play. But I think oil's done a great move. It could go a little higher, but it would really surprise me if it just keeps staircasing higher and going past 84, and that would be. But again, that's why you need to have a long-term thesis. Are you bullish or are you bearish? And if you're bullish, as I am, but I'm not really in oil. I'm in one stock, which to be honest hasn't even been going up anyway during this staircase move. But if you're bullish oil and you think like me, it might come down here, just trim, I don't know, 10%. If it keeps going and surprising you, great, you make more money. So keep your core position in accordance with your long-term thesis. But for me, oil, great move. I wanted this. I thought it would happen. Just now 82, 83 should be resistance. I think it's obvious why. Uranium, this is also another breakout. Look at this. 22.6 for me would really do it, and it did it. I mean, look at this. 22.77 is where it closed. Next stop up here, 23.26. I don't think 23 will be any type of resistance. Do we stop here, go sideways, come back, test this? But ultimately, I think we're going to go all the way up to this 24 zone and actually again higher. And they deserve it, the uranium bulls. I think it's great thesis, right? Uranium is the only scalable long-term energy for sure compared to anything else. For sure, it's going to be the future main source of energy. And, technically, fundamentally, all the stars are aligned. So definitely, maybe trim on the way up, but hold for 30 or higher. And you're probably in uranium stocks, which I didn't check, but they probably had an even better day. Okay, gold and silver. After all is said and done, gold today was only up $6, but still it was up despite the dollar being up. And the dollar is all the way up at resistance, so that's good. Nice bounce from around here. It went a little lower than I thought, but about the retrace on the upside was quite nice. It's really got to start closing above 1970 and preferably 1980. For me, 1980 is resistance. We never closed above 1980. So that's what you want next. 1980 close, and then you can run past 2000. I think it would, as soon as you close above 1980, you're the next day you'll be above 2000 at the close. I think it all depends on the dollar. I think interest rates also count, but that's it. Dollar and interest rates. I don't think the markets really matter whether they go up or they go down. Gold doesn't really care. I can imagine. And today, again, the markets were down initially, and gold and the miners, right? They went up together. The gold, the precious metals and the miners went up together. Sometimes you can have the miners going down with the markets, but no, it was gold and silver up, miners up, markets down. And okay, they correlated a little bit towards the end, but that's kind of irrelevant. It's generally you zoom out what happened, and gold and silver went up despite the market. So that's quite good. And silver was way up way more than gold. So that's also bullish. Look at silver, a lot more bullish. So look, it came into support here. I did say I'd expect silver at 24.2, 24. It surprised me that it went straight past it on the way up, but it definitely respected it on the way down. So quite happy with that. Gold, yeah, this was resistance, right? I had this 1940-ish, just below 1940, and then you can see we retested it and the ascending. So for me, technical levels worked almost perfectly. Just not so much silver on the way up, but definitely on the retest. So whatever. It's beautiful. Silver, we're above 24. We just want to reclaim that 25 or close above 25. That would be really good. Maybe that would coincide with a 1980 close with gold. That would really do it. Gold at 1980, silver at 25, a close with the dollar rolling over. That would make sense. That's definitely possible. And that would indicate silver going for 26 and gold going for 2020. Forget 2000. That's the way I see it. Definitely possible. I'm not covering the downside. I'm still very actually going. I should do it. Downside is going to be the same. Horizontally, it's going to be 1940-ish because you'll still be hitting the ascending and you'll still be within the horizontal. So not moving this, same thing. And silver on the downside, same thing. I don't see it just crumbling past 24. It's a round number and it's the horizontal support. And if we do go below that, it will be this ascending, I reckon. Okay, the miners. Here, the technical side didn't get that so much. I thought it'd be here. You can tell a gap fill happened here, though. It seemed to be the gap fill that was the support. But look, it closed on that low of day, and the next day is up. But yeah, still a good day, right? 2.5%, 3%. That's quite nice. But we still need that gold and silver closing 1980 and 25 respectively. And then I think we can run towards the old, let's say 3250, 33 zone on the GDX. On the way down, support, well, I have to move this. Support is going to be there now. I'll delete this, no longer relevant. Let's just move that there or something. But if it takes that out, then yeah, it's going to be the retest of this descending, which would coincide with the horizontal low. So that's not going to be good if it goes there. We really want it to keep going up. GDXJ, same sort of thing. This is incorrect and no longer relevant. Obviously, it's now going to be the old low down here. Should have done that for GDX, but whatever. Resistance seems to be this zone, 38, nice round number. Might as well add it in. A short line because it's not very strong support resistance. So that, and again, if we break lower, it's going to be the retest of this descending, which corresponds with the horizontal on the way up. Yeah, it's actually a bit higher now, isn't it? Whatever. On the way up, let's just see. We need gold and silver 20 at 1980 and silver at 25. And then, yeah, let's see if we can go for the old highs in the 40s. So it looks good. For me, it's all about the dollar. Can we roll over? Interest rates, what are they going to do next? And how do they affect the dollar and therefore the metals? So, but otherwise, very strong day for commodities. You know, I will finish very quickly on Bitcoin, very quickly, because it was kind of irrelevant. It was quiet. And you know what? It's just not going up. It's just sideways. It just wants to go down. You know, I've said it for a few days. For me, this thing needs to go down to find strength. It's not strong here. The market's been going up non-stop. This thing is not going up. And what doesn't go up must come down until it can find support. And you know what? I don't think it will find support here at 28,500, which should be, you know, maybe intraday support. It probably needs to come back down to this ascending or somewhere here. Let's say probably 27,000, right? It takes 1 or 2 days, comes here, maybe a little dip below 27,000, and then it finds support, and it probably closes the day above 27,000. But I think it needs a bit of a flush because it's boring, low volume, bearish, you know, not long-term bear. Well, that's a different story. But yeah, short-term bearish Bitcoin. Anyway, that'll do. Fun day. Good luck. Let's see what happens tomorrow.